Okay. Hey, Steve, thank you very much. I do appreciate it. I really enjoyed it. I was fortunate. I got to look at his slides there this afternoon and then again this evening. And I went through each and every one of those, and you can see where it comes to that 100 SMA. And if you look real closely, I've got it pretty faint on here. Let me darken it up just a little bit. There we go. You might be able to see it now. You can see that 100 SMA. I've got it laying right in there. So what I'll do is I will watch it for myself, and I can definitely see where it might be very, very useful as chart starts moving up, using it as an area. And you know, I really like what Steve there said. It's not, you know, the moving averages aren't for I mean, he said it right there for him. He's not looking at the moving averages for a sell signal or anything. It's just you want to watch it when it comes up. And also what he says about significant, I thought that was very important, and I thought it was very well put. You know, what is significant? And I'm going to try to put some sort of number on there. You know, when you're looking at a chart and you see 77% to the 200, I think we can safely say that's significant. So there may be a lot of times where we use that 100 SMA if we start seeing price run up to it, especially after 3 or 4 days. We get into that area, and if we start seeing a sell signal, and like Steve uses the stochastics RSI if it's in the overbought area there. So anyway, as BK says, great observation. I appreciate that. That's what makes, to me, that's what makes this trading room so good. Somebody's willing to go out there and on their own just share stuff like that. Whether you use it or not, it's fantastic, and I appreciate it. Thank you, Steve. Okay, here we are. Again, welcome to the Tuesday night members e-learning. I do appreciate it. Let's start off with one chart here. Let's take a look at this. And what I want to point out is the importance of being a profit trader. There you go, right there. PHMD. There were quite a few people in this stock that's here in the trading room that was in this, and they made some pretty darn good money. Some people got in maybe today, maybe some yesterday, maybe some back here. But there was an awful lot of people in the trading room today that made some dollars. And you made the dollars because you sold it up here. Now, when it came up, I'm not even going to pretend I knew that that was going to happen, because absolutely not. No way in the world did I know this was going to end up like this today. Personally, what I did is I had this line up there about this 270 area, and when it reached that area, I took profits. Real simple. And at the time, it was a very nice looking candlestick. So why did I take profits? 58% why. There's 58 little reasons, little percent reasons why. You don't want to be greedy. You want to take some of those profits. Now, somebody in the room today said that they were in. I think it was one of the inverse. So I'll say UVXY maybe. He said he was in it yesterday and he wasn't looking too good, and today, or he was in it this morning and it wasn't looking too good, and by the afternoon his IQ raised up a few points. Right now, I personally feel like my Q is batting about 1,000 because of that chart and taking that percent off up here. So great job for everyone that did that. I just really good job collecting some money on a very nice chart. And this was an RBB this morning when it started moving up over the 50-day simple moving average. It is not an RBB here. It is when it started moving up. Anyway, great job on that. Okay, let's see here. Something I wanted to point out. There's let's look at the SPY. I guess let's start with that. Uh, we came into. I marked this yesterday. I think it was. I wrote danger zone in here, and I still think we're in that danger zone. Let me go to the naked chart real quick. There we are. Um, we're we're in this little pennant. We've got this pennant here, and as long as we stay in the middle, we're just range bound. Bulls and bears are pushing and pulling, fighting. They're playing tug of war. Some minutes they might be trying to push the rope, and the other minutes they're trying to pull the rope. They're just not getting anywhere. I think the big clue will be when we see the direction the winner takes it. So if the bulls are the winner, we'll see it come out of this area, and if the bears are the winner, we'll see it fall out of this area. And if we fall out of this area, for whatever it's worth, I personally have no faith in this low or this low. And I'm not going to have until I see that buy signal. I don't buy lows, I buy signals. And I certainly use the lows. If I see a buy signal, if I see a buy, here, let's do this. Let's make that blue. Let's just say we come across right here and price moves down. I see a buy signal right here. Well, yeah, I'm gonna say, hey, we're on a double bottom and we've got maybe a bullish engulf or a piercing candle or something like that. I'm certainly going to use that, but I'm not even going to think about being a buyer here unless I see one of these green candles and a low tail like right there. You see a low tail, and then we have a Hiromi, and then we ran up. So I'm going to have to see that. Today we put in a tail down here. This could be a low tail, but we need to see those bulls step in, and we'll know that tomorrow. So also on this chart, if somebody's looking for a bearish H pattern, there's a lot of these out there tonight. There's a ton of them. And we've got this bearish H pattern here. If you look at Qs, you can see it in the Qs, the same thing. You can see that pattern where we're down, and then you see us come up like that. That's starting that bearish H pattern. Take a look at IYT. That's not IYT. Try that again. There we go. Take a look at IYT. See how we're down? We come up. And it's the same pattern as a J hook, just flipped over. So, what we're looking at is we've got that run to the downside. We've got the short-term pop up, or the PBO. If you follow the PBOs, if you're looking for that, you've got the PBO. And notice how we have this little dark cloud cover right here. So where on a bullish PBO, we might be looking for a piercing candle. That would be the opposite here. But now we have a little dark cloud cover, and that tells us that we may have a top forming, where if this was a J hook and this was a piercing candle, then we would be looking at this and saying, hey, that is a bottom forming. We have that low in there, and then you can just follow it down. And of course, we need to see the breakthrough to fulfill that actual H, just like you need to see the breakout to fulfill the actual J. But there are quite a few of these in here tonight. In fact, we'll just take a look at them. One of the scans I have, and I do believe it's on the website, is the squeeze, and I'll talk about that just a little bit. Whoops, I must already have. Well, yeah, I already have it open. Let's see here. There we go. Basically, what the squeeze is, squeeze the moving average. It's engulfing the big three, is what it's doing. And here, there we go. It's engulfing the big three. Now I've got it written so that it doesn't have to be an exact engulf because I want a little bit of leeway in there. I want my eyes to decide, not the scan to decide. So here's RD NT, RDNT, we're down. See how we rise up and we have a big bearish engulf here. Note it is on the 100-day simple moving average. But the moving average by itself, I don't think it has a great, well, it has weight, just like any moving average. I guess if you were dedicated to moving averages and that's all you looked at, then I would suspect that's a very important place right now. I tend to follow what the candlesticks do, candlestick patterns, and then I look at other stuff, just my choice. So what I see here is that H pattern. I see a blue ice failure. I see a bearish engulf. I see more downside. Just simple as that. TREX. I'm not cherry picking these. These are not picked at all. I just simply am running a scan. Price greater than 8. The squeeze moving average down and volume. That's it. And there's 20 items. I don't think all 20 are good though. But here's TREX. You can see how it engulfed the big three and closed down. Is there a major distinction between a PBO and a J-hook? Dave, the PBO, a J-hook is the breakout. Let me get my pen here. This is a J-hook. Okay. The PBO is say a buy in that area right there. That's about where your PBO starts. So a PBO is nothing more than the beginning of wave 3. Now let's do it this way. Let me change color. So you've got wave 1. Down is wave 2. Up is wave 3. And the PBO is between wave 1 and wave 3. That's the buy signal that you're looking for on the PBO. Okay, so ARK, you can see how that engulfed the moving averages. We have a blue ice failure and we have a piercing candle here. I mean, I'm not going to run down every one of these. You get the picture. Nike might be an important one. Let's take a look at that one. Nike is an important chart, a good chart to trade. You can see here how we have a doji bearish engulf, blue ice failure. This looks like it may see a little more weakness. And we'll look at FedEx and then we'll be done with this. FedEx is looking a little bit on the short side. And you can see here that the H pattern is there, right there. So you have a down move, you have an up move, and you have a down move. And that starts that bearish H pattern. Okay, so that's a little bit on those. What I would like to do here is something I did, and yes, I'll post the scan out there in afterwards. Okay, somebody just remind me before we close. I'm not going to do it while the recording's going. It's just kind of a waste of time. But based on what Steve showed us, I came in here and I created a little scan using that 100 a little bit. And here's a few charts I came up with. I have 2 flagged that I particularly like. In fact, I like them enough. They will be on the watch list tomorrow. ADHD, this we've had it on the watch list, so I may or not put it on the watch list. One thing about it, it's moved up a bit much for me to put on the watch list, so it's probably not likely it's going to be on the watch list, even though it has, note that it has 10% still to that 100. USLV, this won't be on the watch list because it gapped up. It's not the type of chart that I want to put on a watch list. But you can see here that It has 10% to the 100. A lot of you that have studied the RBBs, you see exactly where I'm going with this. BBLU, this is a chart I kind of like for tomorrow. I can pretty much guarantee it'll be on the watch list unless I look at the chart, the pre-market, and it's down ugly. But if we take where it closed today and up, we have 10% to the 100. We have over that. So you can see where I'm going with this, I think. 10% to the 100. So those, I just took what he posted there and what he shared, and then I just created a little scan to go with what we already have. And I'll kind of play around with it. Again, Steve, I want to say thank you very much. I do appreciate that. So I'll just put this over here right now. Okay, I'd like to kind of open it up for questions. Maybe somebody has some charts to look at or just some general questions, and we'll just kind of take it from there. Okay, let's see. Steve was saying IYT gave us a warning sign. Yeah, look at that warning sign over there. That is definitely something to pay attention to. And I think if we let me change this and let's put up just the 50, because that's the important one right now. If you take a look at this chart, a couple of good rules of thumb here might be, if you see a high, draw a line to the failed high like we have up here. And then if you see that chart pattern, I don't care that we have a hammer, I don't care that we have a gap up here. What's important is we have a high, we have a failed high, and now we failed below the 50. And there's no way on earth, I think, that I just don't believe anybody can get long in here until at least we close up over that 50-day simple moving average. I think that's just a risky play right in there. In fact, more than anything, it's probably a bit of a short play. So you can see the warning sign. That would have been a great time to be short on that bar, and then you'd have been in the green already. Let's see here. Okay. Let's see, BK, TVIX percent-wise compares price to UVIX. Yeah, it does. That's not it. Let's try that again. There we are. It can move a little bit. Sometimes it does, and I've found times that UVXY will move faster and give you that bigger move. I really, usually when I put TVIX or UVXY on the watch list, I'll put them both because they virtually are the same chart. And some traders, they can't trade the UVXY price, so they trade the TVXY price, TVIX price, or some traders just simply want to trade the lower price. But I've actually seen them kind of change up. One move a little faster percent-wise than the other, and one might move a little more than the other. Of course, if you're looking at 10% of $30 is greater than 10% of $3 too. So let's see, AVAL. AVAL. AVAL is that a pinball setup? Not quite a pinball setup. So I think what we'll do is let's call it one of the snapback setups. So we're looking for the 50 up here. I think if we were to draw a line in there, Charles, let's draw it on the 50. Isn't it magical how it comes to this little shelf right here? We have a Morningstar pattern here. We rallied up, pulled back. We have a low, high, higher low. So far, I think that chart pattern is working. The fact that we're over the T line in the 50 certainly puts it in the bullish court for me, and I would certainly look at a trade right here. And right now, I would look at a trade max of about 12%, 12, maybe 13%. And when I say max, I'm not saying that it can't go any further. I'm just saying that I would box trades in a little bit. In other words, from here to here is a trade, and then from here, let's see, I'm going to start right here. From there down might be a trade. So I would break the trades up into two pieces. You could certainly keep it, but I would really watch this area for that sell signal. Pretty nice chart. Thank you. Hi, James. Rick, is a tail more powerful than a Marbu? No. The candle, the body candle, is more powerful. Yeah. You mentioned that you wanted to see a bullish candle with a tail. Yeah, you know what? What I'm after is showing that there's buyers in the neighborhood, is what I'm looking for. And I'm looking for buyers in the neighborhood. And also, if you have buyers in the neighborhood, then what happens is it might bring buyers tomorrow, and then that tail today might be the low, and then we can trade off that low. So that might be the higher low we're working for. SPY. That could be the higher low we're looking for, and that would set up a pattern in there that we could trade. But the candle itself is where I think the power is. I do think you need to look at the overall candle. It needs to be considered, but the body of the candle is where I put most of my weight. Let's see, AMGN still a bearish setup, very bearish here. Not a bull sign here. So I would say if you're short, I would stay short on this. As far as a target to the downside, the first thing I'm going to do is go down to support right around 142 area, and it just looks like it, on volume, good volume today. We have that H pattern, that blue ice failure. I think we still have a short setup. My stop would be a close over the 50 is what I would look at. Or if it gapped down, there is more than just a close over the 50, for instance. Say we gap down and we come up and put in a piercing candle, then I would definitely want to be out of it, because that is a pretty nice reversal candle there. Thanks, Gigi. Oh, you're welcome. You're welcome, Dee. TX. Hi, Petra. How are you? TX. We've got some steel going on here. Look how we've made that low a high and a higher low. That's one of the, first, actually we have a double bottom. Draw a straight line in there and my eyes aren't so crooked. So we have a nice double bottom in here. If you're already long, then I would suspect the stop would be just slightly underneath those lows. Over the 20 would really get this going. And let's see here. We've got about 6.5%. So we're looking at that 14% trade there, a little over 14%. And let's take a note of these two areas right there. And that lines right up with the 50. Boom. Great target area in this. Now, of course, if this starts selling off, if it does something like this, you can see it's in a trend line, or it's in a downtrend. So when I said a close over the 50, or a close over the 20, that would start that trend changing compared to what it's doing right at this moment, the close today, which is still down. If we look at the weekly chart, you can see double bottom in there. So I would look for a possible reversal signal here. Possible. TX, thank you. Let's see. Hey, Walkus, I can't hear you. Can you hear me? I'm only kidding you. Full of vinegar and you know what tonight. Uh, anyone else? Good. Glad. Anyone else have anything that you might want to look at? BSI. Thanks, John. BBSI. Let's see. HORZ. I'm not sure what that is. Horizontal, maybe. Breakout above the big three, definitely. I like this chart, by the way. Let's just start right there, right now. That's a nice chart. We've moved down. One of the things I like about it is, let me go get the right line. There we are. Look how we made the low, and so far we've stayed above that low. We've dipped down a little bit. This is your rounded bottom breakout. You can see the dip here. The moving averages start to cross up, and now we're over that 50-day simple moving average. The 20 is over the 50. Just a nice little pullback here, and the bulls got a hold of it. Today's doji could be setting up for a doji sandwich or a continuation pattern that might look something like this tomorrow. Something like that. You know, this is where I might want to keep an eye on the 100 SMA, and let's take that 100 and just draw it across. Okay, so what I would do here is, if this started moving, you know, tomorrow or maybe the next day, if it started moving up as it approached that 100, I would be very cautious on it. I would watch the intraday volume. I would make sure that the bulls are still buying it. If I could see that it was popping through there, now I use the scanner, so if I started seeing numbers, say 2 times normalized volume coming in over this area here, then I would probably put it on a chart and micromanage it up to about $40, $39, $40, and just watch it to see if it can manage to get up there. Just keeping in mind you want to protect those profits at all times. You don't have to get it all the way up in here. Nice chart, thank you. Hershey, Andy, Dee, sorry, got ahead of myself. Apple. Apple's still a short candidate just because of the chart pattern. Now, you know, Apple's, it's trying to form maybe a little bullish here. We've got the low. We are up higher. Let's go look at just the candlestick chart. There we go. And let's get rid of the 50 because we don't want anything to distract us. There we are. And let's just get rid of this right here. So if you look at the chart here, you know what? I'm going to call that a double bottom. That's close enough to me. I don't, you know, I feel you have to give things a little bit of room. So we have that double bottom here. We have a nice little couple of gaps in here. It rallied up and it pulled back, and so far it's holding. So we have a low, high, higher low. So it still has the ability to just hop right up and get bullish. You know, now let's look at a chart with the moving averages. The fact that it's under the 50, we put this downtrend line in there. Since I'm a pattern trader, I'm going to have to go with the pattern, and the pattern is still short. Where I would get long as if it broke out above that trend line, above the 50, pretty much taking out these highs. That's where I would be long on Apple. And there was one more up there, I thought. Oh well, I'm pretty. See, I didn't mean to skip you there, Nigel. Let's see, COVS. COVS might be trying to put in a bottom, but I would sure. You know, this is one of these charts. I'll tell you what. Let's measure what our possible our possible profit is, okay? So we're going to come up here. There's 7, 8%. Okay, that's not worth too much to me. So let's run it up a little bit higher. You can see we come to these tops right here. It also is that 100, and that is about 22, 20, we'll call it 22.5%. Okay, that becomes worth it. So I'm not even going to worry about that little high. All I'm going to worry about is that 22%. So if you waited till it broke out, and I don't know if you're in it now or not, and if you're in it, I would stay in it, and I'll show you where a stop would be. But if you waited till it broke out and you got in at 270, we're still at that 22%. So yeah, I would have to wait to that breakout. Now, if you look at this candle pattern right here, we have a pair of dojis. It's not quite a bullish engulf, but it is a bullish candle. And look at that hammer pulled back. We held fairly close. I think we actually came a little bit lower. Yeah, a little bit lower than that bullish candle, but we closed up. Because we're closing above those lows, then this chart looks a little bit bullish to me, and I would certainly have a very tight stop at 243. Now, I want to point something out. Gigi and Pam, thank you very much for posting that. Look, I know that when you're trading, it's very, very important to really consider what the market is doing, and you really do have more winners and larger gains if you're trading with the market, whether you're long or short. So if the market is moving down, then you don't want to be loading up on longs. So sure, we can catch those longs in there, but they're far and few between. They're not as forgiving. When the market is moving up, it's a little more forgiving. But when the market is moving down, you really don't want to go after a bunch of those longs. So we need to be careful with that if the market is moving down. Thanks, Steve. I saw that there. Oh, NXPI. There we go. NXPI. Still trending up. As long as we stay above the T line, these candles here just tells me we're in a little bit of consolidation. There was pretty good volume on today's candle, so if you see some weakness, I don't know that I would be forcing that trade. I would keep long trades on a very, very short leash right now. If this starts to turn around, though, that's a very nice chart if it has some follow through. But we need to watch for that bullish follow through on that one. Nice chart there. If the market got bullish, that would be a very good one. Let's see, we didn't do Hershey, did we? Hershey. Hershey is a great play for the time of year. I apologize. I'm totally at a loss at the right seasonal. There we go. Hershey's a great seasonal play. You've got Valentine's Day coming up. Guys, hint, hint. And ladies, guys like candy and flowers too, just so you know. But Hershey looks like to me it's headed up to these highs. So we're looking at 108. Let's look at the weekly chart to see what we can find. Check the weekly chart out. Yikes. That's yikes is a beauty yikes, by the way. Man, this starts to break out. I would watch 120, 25, 30. Nice trade. Nice chart. I have to write that one down. Hershey. Thank you. Very nice weekly chart on Hershey. What else do we have here? Oh, And Thomas, F-E-Y-E. Apologize if I missed somebody up there. I might have to type it again. Let's see, F-E-Y-E. Today's candle, what does it suggest? It suggests consolidation. consolidation to maybe a little bit of short-term profit taking. Um, I think FEYE is still in the bottom construction area. I think a breakout over about this 3644, 45 area might take us to some new highs there. I still think it's a pretty nice chart. This is not a sell signal right here. Um, I'd have to see a companion sell signal with it, and even then, Tom, I think I would just look at a possible little pullback. Set your stop in there and let the chart work. I think that would be the best play. Make sure your stop. I don't know where you bought it at. You've been talking about it for some time, so I'm gonna guess that you've been in it for a little bit. And if you have a profit, I would keep your stop above your profit. That way, if it does pull back and stop you, at least you have a buck. You know, maybe you have a buck for a candy bar at the end of the day. Who knows? You can always get back in it if it starts moving up again. Let's see. Some guys like flowers. That's right. Mother's Day and Easter's coming up too. The sweet chart. Let's see, Ian. If market goes sideways, how do you generally play it? I usually find something to talk about to the day that keeps me out of positions. If you'll notice, when the market is sideways, not doing anything, or not doing something I like, have you noticed how I'm not very active in the market? I mean, because I don't want to get myself into a position where I'm over trading. So, like I said today, as long as we stay between these two diagonal lines here, this is just a lot of noise, and I would trade extremely light until we know which way it breaks out. As far as catching that early breakout, I wouldn't try to. I think there's plenty time to trade, whether it's going to be a bullish move down, a bearish move down, or a bullish move out the top side. And is that a premium? Because a lot of it comes from areas stricken. Cocoa, okay. I'm sorry. If you know, on the recording you might hear me laugh. It's because I read things in the chat that make me chuckle. Andy, is that a ticker symbol? NP? I hope not. Okay, good. Yeah, I hope not. RPRX, Dave is probably looking for a long trade here. I cannot stress enough that the importance of waiting for a bullish candle, and this chart qualifies for that. You know, if you take a look at the chart, you can see that overall, I think the chart is maybe headed for more of a bullish move. It's doing everything right. We've got that island reversal here, a great candle back here. In fact, I'm going to draw another line at that bottom. There we go. And you can see it holding up inside that bullish candle, in fact, holding well above the gap. I think anywhere in here might be an area to be, say, doing a little accumulating, but I would rather wait for a buy signal. Let some traders come in here and tell you, yep, we like it, and then trade off that candle. I would be hard pressed to try to catch us in here. Although I like the chart, under the current market conditions, I just don't think it's wise to try to outsmart the chart. I would wait for that picture to draw and then trade off that candlestick. Very important to wait for those buyers. This is one of these charts too where what I would do is I would say, okay, where's my target? And I would probably, if it gets to going, I can see that 200 because of this void right there. I can see the 200. And if you noticed it real quick, I'll start it right here. We were knocking on the door of 30%. So when you're thinking about a 30% trade, is it really worth fighting for 10% down here, trying to get that super low buy? So I would put on the watch list and I would wait till those buyers come in. Symmetrical triangles, a continuation past based on how you came into the triangle. Yes, yes. If it's from the top down, it would be a bearish symmetrical triangle. If it was top bottom up, it might be a bullish. Let's see, what was that? UAN. There we N. UAN. There we go. UAN looks like Nigel is looking for a rounded bottom breakout after a double bottom. Is that a bullish engulf? Yes, it is. I want to talk about something really quick here. We have a few minutes. This is something I'm going to be talking about it down the road a lot more. And I talked about it in Denver this past week, and we're looking at excuse me, we're looking at candlesticks. But one thing I think that might be worth looking at are double candlesticks, buy signals, or the second buy signal, because many times the first time there's not an actual candlestick signal. And if we go back here, you can see we do have a bullish engulf. We did rally up and we did pull back to a higher low. Okay, that's good right there. Now look at that piercing candle right there. That right there tells me that this chart has it has a good probability of a higher move, realizing that we're still going to get the normal pullbacks. So I look at this chart. That's after the rounded bottom breakout. That's what I see next. I see an engulf, I see a high, I see a higher low or double bottom. I see a bullish piercing candle making the reversal. Very important candle to look for reversals. One, they're easy to spot, and two, they actually happen often. And now you see the follow through. Great little T-line run. Right now, nothing suggests this is selling. If anything, it's just consolidation, and I would look at that area as a buy area. Target wise, let's get up into here. Yeah, we'll get up into that 13. We'll call it 13 area. So that's what I would look at. Just watch for those sell signals in there. Nice chart. UAN. Let's see, WHR for the watch list. Yes. Excuse me. WHR trending up very nice here. The bears got a hold of it. Look what those bulls did with it. Just a great job. Do we have a selling candle here? We've got some profit-taking candle perhaps. I don't know if we have any selling candle here or have a selling candle. What I would do is draw a line like that right there. Just extend it up. And to be honest, any pullback, as long as it stays above that trend line, I think I would be pretty happy with it. A pullback there. Let's draw one more line on here. Let's just take those tops right in there, and I actually want to bring it down to that big bullish candle. So yeah, this is where I would be more than happy to buy it down in this area. And that would also, if it did pull back, say 191 something, If it did and then reverse from there, then we would have that low, high, higher low set in place. Watch for that bullish candle and then up. And that's just if it gets that low. Very, very nice chart. It might not even pull back that low. Let's see, UAN T-line entry. Dave, let's take a look at what we've got here. I mean, if you can catch it at the T-line, sure. If you could do that, I would want it. If I bought it at the T-line, I would want it to close back up over the 50 before it closed below the T-line. If it closed below the T-line, I would be out of it if you're going to T-line trade. But if we take a look at this, let's say you bought it at the T-line tomorrow, say at 1024. You're looking at 4%. I'm not sure that I doubt I would pinch pennies for 4%. I know that may be a lot, but what you're trading here is the chart pattern, and you're looking for let's see what I say up here. It was 13. That's right, 13 something. We'll call it 13 even. So you're looking at 22.5% move on this. Fighting for 4% really is small for the whole trade. So I just simply would look for an entry that makes you happy in this area right here. I always find this. Here's what happens. I'm fortunate and get to talk to a lot of people throughout the day, throughout the week, month, year, and this is a scenario I see quite often, and it's where somebody says, "Okay, I like the chart. I really, really like the chart, but I only want to pay, say, somewhere in that level for it." Okay, no problem. I get that. I truly, truly, truly do. I absolutely get that. So what happens is, say we open up right here, and then it moves down. Now what happens is you really don't buy it here because that candle just scares the devil right out of you. So what happens is you don't buy it. And then it starts moving up, and notice all I've done is draw today's candle. It starts moving up, and now the argument is, well, now it's moved too high. So it's kind of like, we battle ourselves. It sounds all cool that, yeah, we want that lower price, but the reality is we don't buy it because that candle scares us. So it's kind of like, hey, if you like it down there, buy it down there. Don't worry about that candle so much. You know your stop is going to be the T-line, or be happy with buying it somewhere in the middle or on a breakout. Anyway, that's just a common thing I see. Everybody thinks they want it lower until they see that candle, and then, uh-oh, that's not such a good looking candle. Which all I did was draw today's candle. That's all I drew, and it turned out not too bad at all. Pizza. Pizza's still a bullish chart. Now there just comes a time when you're going to get dips no matter what. That's what I'd be concerned with on pizza. Is just those little dips. Don't chase the price. I think it's a nice chart. I think it's still a bullish chart. There's no sell signal in here. But the last thing I would want to do is buy it here, and then it pulls back just a little bit before it moves up, just like it did there, just like it did there, just like it did there, here. I would just hate to buy it at the top is all. Yeah, there you go. Hope for a pullback. Nice chart. Everybody loves pizza. DPZ. DP, yeah, be patient. You're going to get your pullback on that one. and Buffalo Wild Wings. Hot wings, cold beer. How can you go wrong with that? That is a buy. Man, I wish I would have saw that today. That's a beautiful chart. Great little uh, sideways consolidation after a nice bullish move. Nice charts. Um, Steve says pot makes you eat pizza. Let's see, EXXI. EXXI just moving sideways. There's no buy signal here yet. Um, you want to be careful with these oil stocks. Is the bottom in? I don't know. Let's go look at USO. It is a piercing candle. Did notice that today. So I'm going to be watching USO. Let's see, XOIL light sweet crude. We have a nice little doji here. Doji closing at the top end of the candle. Nice little dragonfly doji. So, might we get something in those oils going? If we do, I would only look at them short term. Now, there can be some great money short term, but I'd be hard pressed looking for I'd be hard pressed saying this is the bottom in oils. And as far as EXXI goes, there's no buy signal here yet. I'm long this one, by the way. Just waiting for it. My stop, I have a stop in, watching the chart. We'll see what happens. And I'm simply looking for that trade that gives me 30% right there. That's it. I'd be happy. I'd scream all day if this thing ran up to 360, and I would take my 30%. Let's see, no hog. The candle bars are not any good. The candy bars. They taste funny. They do. They taste funny. Let's see. Food restaurant stocks are strong. Yeah, everybody can eat out now and afford to drive there. And what do we got? Joe Montana only likes it when it's free. Let's see. I made a note on my calendar for next year to get into those stocks in November. I think it's a seasonal play for football. Yeah, seasonal play for football. Also, when you think about it, you get home from work, you need to get out there and do some holiday shopping. Nobody wants to cook, so what do? They stop, grab a pizza, a wing, something like that on the way shopping too. You may be very right about that seasonal play for all those food joints. Taser. Yep, there we are. Taser. You said this morning might be a good to buy, but you didn't, and good because it went down. What made you not buy it? The market. Alfred, how many times have I said don't force a square peg in a round hole? That was it right there. Simply the market. I still think the Taser chart is good. I think we're just having a little pullback right now. But the reason I didn't get in it is simply because of the market. Let's see, Ken, does that mean price will come down because transport costs are down? I don't know. We had a discussion about this the other day, and I think if I was to take a poll in the room, we're probably divided on lower gas prices. Is that really good, or is that not so good? I think they're good for the very, very narrow-minded and short term. I think lower gas prices are not good for a long term, and I think a lot of the big dogs know that. So if you take a look at IYT, if the price of fuel is so low, why does IYT look like poo? Why does FedEx look like poo? Think about it. So anyway, I'll leave that one right there. Like I said, I think the room is divided on whether gas prices lower is good or not. Let's see. Lower gas prices definitely good for those low-cost restaurants, though. That's true, Fran. You are right. You are right. Lower gas prices means you're going to eat out a little bit more. Definitely right about that. Okay. So let's. Did we look at IWM and then we'll call it a night? Yeah, IWM. IWM kind of closed halfway good, and I say that because of the wick today. It was down ugly and it really came back pretty nice. But I do not think it closed well enough to be crazy bullish. What I would do is simply draw those lines like that right there and trade the move either out the top or down the bottom is what I would trade with. So if we move out the top, let's see, who asked me, Alfred, Taser, why didn't I buy Taser when it looked so good? Because the market did not look so good. And again, don't put a square peg in a round hole. I learned a long time ago that the market can come in here and thump you hard when you try to go around it. If you trade with it, the market will allow you in. But if you try to go around the market, it will thump you. And trading long today, if you weren't careful, would thump you. I mean, heck, let's look at that PHMD. Look at that. Is it because the market was not really bullish or doing anything? I can't really say for sure, but the market was pretty saggy and didn't go anywhere, and look how this thing pulled back. Could it be that there's some fear out there and it had a nice day, maybe a nice week here, and everybody realizes that was in it and said, you know what, I better take my money. I better take my money because we just might see a pullback. So, okay, I'm going to check out here. I'll say goodnight to everybody. We'll see you tomorrow morning. And hey, let's see. I'll see you tomorrow morning. I'm going to turn the recorder off real quick. Thanks, everybody, for being here. Appreciate it.